Hello, this is David Skrika, and this is, I guess, my first podcast for Gold Stock Advisor. So what we're going to do in the future here is probably about every second week I'm going to do a podcast, because sometimes it's easier to explain things in words than actually writing it. And this is kind of an interesting time to do my first podcast because it's Wednesday. It's the day after the election. This is going to go out on Thursday. I'm actually in a hotel in Atlanta, Georgia right now, and I'm going to head to Alabama tomorrow to see a project of a graphite company. Graphite's one of the kind of a unique, they call them rare earths metals, kind of a precious metals. It's used a lot in electric cars and that sort of thing. And what's interesting is that these kind of metals, China actually has kind of a monopoly on right now. And the project I'm going to see is Alabama used to produce graphite and other metals back in the early to mid part of the 20th century. And then the production shut down, but now they're kind of strategic metals. And the project I'm going to see is potentially going to be the first new kind of producing metal graphite company. You know, in the new lightweight 787 Boeing's building is going to use graphite. So it's using a lot of materials. This could be potentially within 18 to 24 months the first new graphite company here in the United States, which is a big thing because usually you have to do, there's some in Canada, mostly you have to go to some third world country where it's very difficult to maybe deal with the laws and the politicians. And Alabama, being kind of a red state, being a state that's a bit depressed, is very, very open for business, and we'll be driving there tomorrow. And for example, the property is actually, I'm right here in Atlanta, in a very cosmopolitan city. This property is only an hour and a half away from Atlanta, which makes it kind of interesting. But to get into the gold market, we saw a big drop in the market today. The market was down over 300 points after the election. What I find funny about the whole thing is that people like to act like the market's gone up ever since Obama got in power, and somehow that was his doing. But now that the market's gone down today, the spin was, it's because Draghi, the European Central Bank head, made some negative comments on the European economy, and there's some of the growth rates were downgraded for the European economy in Germany and Spain and Italy and these kind of places. So I think that's kind of nonsense. I think a lot of today's sell-off was because of the election. I think people are worried about, us hitting the fiscal cliff. And see, I have a different view. I think what's really propped up this rally has essentially been money printing in the last few years. That if you print enough money, you can make anything go up. And Mark Faber's been very fond of saying this. And remember, when you artificially depress interest rates, people are going to look for yield, so they're going to go into equities because, hey, I'd rather buy this stock that's yielding 2% than buy a 10-year bond that's yielding 1.5%. So you're artificially inflating the prices of stocks. And then big corporations can go and turn around and borrow money at almost nothing. So it's just, and margin rates go down for big investors and rich investors. So what's funny is that by running huge deficits and supposedly helping the poor, you're actually turning around hurting and helping actually that quote-unquote 1% who can really benefit from the loose monetary policy. So I think that's the kind of thing to look at here. And I think where I kind of differ is I don't think there's a huge difference. I think the country's essentially broke. I think it's the collapse of the American empire, much that happened to British and Rome. I've talked about this on numerous occasions. But I think one thing where we really get into some unique things about what's happening now is I think rather than like some of these poor policies which created huge deficits, which created money printing, which helped the stock market, I think like when you're talking about raising capital gains, you're talking about raising dividend taxes, and as bad as the fiscal situation is, I think you need to promote saving now, not promote consumerism. So I think right now the second term is going to look a little different. I think if you do get some of these anti kind of investing or saving measures in there, I think the market's going to view this a lot more negative. Now, I think one thing that's going to bail out the market in the next year to 2 years is I foresee that Europe is in it's bottoming right now. Right now, you're kind of throwing everything in the kitchen sink. They're downgrading, debts. They're downgrading the outlooks of economies, et cetera, et cetera. So they're basically giving you a worst case scenario, and then at some point, 2013, 2014, you can beat that worst case scenario.
the deficits come down, and obviously that helps the stock market in Europe over the next year or two, and that can drag up the S&P 500. But I think what happens if Spain and Britain and these places all have their deficits, say, in 2 years or so, the focus goes to the United States, and we get a debt crisis in the United States. So that's essentially what I think is going to happen. That's very negative for the dollar. That's very positive for gold. So I'm just going to sign off here by saying that the election is over with. We saw a big sell-off. I think there's short-term worries over the fiscal cliff. I think the fiscal cliff will kick the can down the road. But I think we're in this phase now where we voted for the status quo. The Senate, the Congress did not change. The Senate did not change. Obama did not change. It's the same president. So the status quo means what? It means a stagnant economy. It means money printing. It means bickering over taxes and spending cuts. It basically means nothing's going to get done. And I think this is very positive for gold going forward. So this is David Skriko signing off. Take care. Talk to you in 2 weeks, and you'll have an written update from me next week.